You are listening to Mining Stock Education.
I'm Bill Powers. It's Mining Stock Education. Thanks for tuning in. And in today's show, you're in for a treat. It's all things gold royalties. We're going to talk about trends in gold royalties, some of the recent M&A acquisitions, as well as where you as a royalty company investor should look for value. Joining me today is a sector expert, my guest, Alexandra Sherron. You're the CEO and president of Empress Royalties for a non-sponsored interview. Thank you for coming on the show today.
Thank you so much for having me. This is going to be a very exciting conversation.
Yes, I'm looking forward to it. And let's start with your pedigree. I understand that you entered the business even as a teenager. Is that right?
I did. I started out in the industry working for a group called Endeavor Financial. At that time, I was the head of research, aka the receptionist who would go through the yellow pages and call up all the different mining companies and ask them to send their annual reports in so we could figure out and do the analysis and the financials of what was happening. I then did my business degree, joined PricewaterhouseCoopers as a junior associate just after BRIAC. So everyone was jumping away from mining and going down to the .coms and got involved with the BC Mining Survey and loved the analytical side. I joined Endeavor Financial as a professional analyst. We worked in a fund for a while. And then I moved over to the project financing side, where we're helping mining companies get banking facilities in place to really fund these development assets and turn them into producing assets. Yes, I've been in the industry for a long time, worked with some of the greats in the industry and some of the great entrepreneurs that have really driven the success of the business for a long time.
And why did you head down into the financial trajectory of the business rather than the geological trajectory?
Yeah, background being in finance. You know, I'm not a geologist. I'm not a mining engineer. I've had the fortune to work with many great ones. But when you combine the finance side of the business and with mining, I think there's so much opportunity and there's so much guidance that's given. You know, when I was at Endeavor Financial, we're advisors for some of the great entrepreneurs in our business and mining geologists like, you know, Clive Johnson from Bema Gold, now B2 Gold, and are helping arrange their project financing in Russia for Kupol. You know, way back in the day when Wheaton River was being put together, I got to get involved in doing some of the corporate financing sides of that. So there's definitely taking some of these amazing mines, but providing them with the right financing solution to get into production in a timely and cost-effective way.
And let's talk about what a royalty is. Some of my listeners are newer, especially as gold has been hot. There's new entrances to the sector. What's a royalty? What's an NSR? What's a stream?
Okay, so a royalty is where a company gets a percentage of revenue from production. An NSR is a net smelter return, so it's a type of royalty. A stream is a little bit different. It's where a company like myself will invest into a mining company, helping them expand production, and take a percentage of their gold or silver as a prepayment. So I will typically do, you know, if I was doing 5% stream on something, I'd get 5% of their gold and I'd pay a 20% spot. So I get an 80% discount. So there's different ways to structure these deals. You know, the royalty model is, you know, originally back in the day when the kings owned the land, or it was royals owned the land, and someone was mining that property for gold or silver, they would pay a royal fee to the king, a royalty, and that's where it originated from. That evolved over time with landowners, say in North America, who there was minerals on their property. They either didn't have the capital to mine themselves or the expertise, so they would get a royalty for the minerals being mined from their property. And then it was, you know, in the 80s with Franco-Nevada that kind of turned it into a business model. And then with Wheaton evolving that further and creating the streaming model in 2004. So it's a very historic business model that has evolved over a period of time. And with Franco, Wheaton, and obviously many more entrants in the last sort of 30 years, there's a way people can invest into these royalty and streaming companies rather than it just being individual ownership of them.
In the sector, just my observation, especially recently, the big ones are getting bigger and the mid-sized ones are getting eaten up. What do you make of this trend?
Yeah, we've definitely seen that trend over the last couple of years. You know, there are definitely the large ones, Wheaton, Royal, Franco at the very, very top. They dominate obviously the industry. There were some mid-tier ones. A lot of those have been amalgamated and picked up. There were some juniors and microcap. What we've really seen the trend in the last while is, with Gold Royalty acquiring Sandstorm, you've had Triple Flag picking up Origin. You've now seen EMX and Elemental, who are more on the junior side, combining now with crypto money from Tether coming in. So yeah, the sector is definitely evolving and changing. There's definitely less players in there, but I think companies are getting rewarded for acquiring other companies and building and making bigger companies.
Does it make it harder for a smaller royalty company to grow into a bigger one? With this landscape that we just talked about?
Absolutely. I mean, there's different types, and we can touch on this later, different types of royalty and streaming companies and very different investment thesis. Everyone always looks at it like we're all the same, but there's very different ways that we invest. There's different catalysts for each company. And so when you're looking at the M&A space, it's hard to find sometimes companies that align in terms of their investment thesis and structure. But I do think you often see that perhaps just the amount of revenue coming into one could really get that extra leverage for the company acquiring it. So there was a few out there, 10 years ago when we set up Empress. 5 years ago, it felt like there was a new one popping up every 2 weeks. There was a whole bunch of new entrants. Some of that consolidation is now starting to happen. But it does come down to the different types of investment strategies that different companies have and what 1 + 1 = 3 and how that looks in the M&A space.
How should an investor who's looking at putting money into a royalty stock, how should they look at it? Should they simply look at it as at net asset value on a per share basis, or what kind of metrics should they apply to their analysis?
I think the industry's changed. I think there's definitely NAV is important consideration. I think you want to look at your cash flow to price ratio. I think that's very important. That's where we're seeing a lot of torque in it. There's traditionally a lot of the streaming companies or royalty companies for a while were looking at long-term assets that might have, revenue coming in way down the road. But especially when you're looking at the precious metal side of the business and you're seeing the lift in gold and silver price, and from, everything that we're reading and we've been seeing and hearing about at the recent conferences, gold and silver are just getting started. So I think you want things that are bringing that revenue in now, and things that are closer to cash flow positive and mines that will be getting into production to really get that torque coming into it.
What about how when an investor is analyzing management and they're looking at like your access to deal flow, your access to capital, how should an investor look at those things?
Again, there's different ways of looking at our sector. You've got the large ones, mid-tiers, becoming more of those now as some taken out, but I think some of the juniors are now combining to go into the mid-tier. And then there's the junior micro-cap side. So, it's what kind of risk profile you want on that, what kind of speculative side you want from the total, the large ones going down to some more speculative side. So investors can look at it from that point of view. You can also look at it as, the different types. So they're the prospect generators, early stage and expensive to acquire. There's a lot of, it's a great way of getting exploration risk into your portfolio if you're interested in that, with experts who have a combined portfolio approach. You then have a bunch of other groups acquiring existing royalties that are already out there. So they're doing an amalgamation of them, but typically paying a premium, part of a competitive bid process. And also, there's no direct relationship with the company. And then there's the other style, which is on the creation side. That's where we as Empress focus. That's more in line with Wheaton and what they're doing. But that is creating that direct money into the company, really helping mines get into production. They can some debt, some equity. Sometimes they don't have access to either. So there's different ways of looking at it from, as I mentioned, the size of the companies, the risk profile there, the style of how they invest, depending how you want to invest in that size. Then you break down to commodities. There are pure gold and silver ones. Empress is one of those. There are other ones that have a more diversified metals portfolio. They've got some battery. There are ones that are just critical metals. So you can invest based upon those matrix. And then also geographically what you're open to. There are ones that are pure tier 1 jurisdictions in North America, Australia. There's ones, who are globally open. We're one of those that's leveraging off our experience as a management team to operate there. So not all royalty companies are created equal. There's definitely, depending you as an investor and coming into the space, whether you're been an investor for a long time or you're just coming into the space, different ways to break down and find the right company or companies that fit within your portfolio. Because essentially, royalty and streaming companies, we're investment companies ourselves, and we had different types of portfolios and different risk profiles.
Can you talk us through that competitive process of getting that royalty? I'm assuming you're one of a few bidders that goes after these royalties. What does that process look like for you?
Yeah, so we've only been in now in a few competitive bid processes. I mean, to summarize that, and I can explain about how we're a little bit different, but to summarize that, there'll be different, typically bankers that come through and have, a mining company will say, okay, I've got this portfolio of royalties. I want to, get some credit for this. The market's not recognizing this or as an example. And then they'll go out to the royalty companies and put forward the information. The analysis goes on and we put it in our bids and then, it goes to the next round of deeper DD and moving it forward. At Empress, we really leverage off our relationships because we're not buying existing portfolios. Typically, we are directly investing in companies, and that is using our network. I've been in the business for a long time, management board for over 250 years. We have that relationship with Endeavor Financial, which is a leading investment banking firm, to really have those direct relationships. So the investments we've made to date have been direct relationships. We know the management team. We know how they operate. We know what they're capable of. And that, from our perspective, really de-risks the investments. When most companies go through a due diligence process, as does, an investor looking at a public company to invest in, the typical starting spot. And we've got many great influencers in our business, Rick Royalty, Martin, yourself, who try to give the education of read the financials, read the press releases, follow them. Are they delivering on what they say? We obviously have that level, but we go a lot deeper. We have mining engineers and geologists who are going through the technical reports, who are meeting with the management teams, hiring third-party engineers to go to site to understand really, is this development plan or this expansion plan possible? If it is, and we've agreed on terms, then we go through a full extensive legal review, looking at all their environmental social plans, looking at all the permits, all the legal agreements, financial review, tax review. If it all makes sense and it's ticked all the box to be a sound investment, then we bring it to the portfolio.
So some have said in jest that royalty company execs only work from 10 to 3, Monday through Thursday. That's not what you described right there, right?
Oh my goodness. I don't know a single one in our business that does that. No, it is a very intensive business, especially for Empress because we're young and we're just, we've just turned cash flow positive. So now we've got cash to deploy. We're really trying to grow it out. We're able to keep our teams lean, but it's a very intensive business. It is a lot of due diligence goes on, a lot of evaluation goes on, finding those right investments to bring into the portfolio because, for us to move the needle, the next couple of deals will really move the needle for us. So it is a lot of work that goes into it. Yes.
Do you consider yourself at a disadvantage to the prospect generator model that also generates their own royalties? Those that play the long game, the EMX, the LTSs, now the Kennerlins. How do you see yourself compared to them?
So I come from a structured finance background, as does most of the team. Most of the team we've worked together in Endeavor Financial. We have experts, geologists, and mining engineers that do advise us. But for us, it's about cash flow and real revenue generation. We took this company, we specifically invested in development or near-term or producing assets or development assets. We started off with 2 development assets. They're now in production. We started with 2 producers. They're expanding the production. We generated $8 million US in revenue. We did them so they were very much getting the cash in front so we could redeploy it, expand our portfolio without having to dilute shareholders. So we did this deliberately to bring in immediate revenue, we can redeploy it, and using our structured finance expertise to do it. So yes.
Are you going to go to the earlier stage project for investment in the future? Or are you going to stay closer to that producing or near-term producing?
We're going to stay closer to the near-term producing and producing assets, especially when we're using hard cash or hard gold and silver to pay for it. We believe that really does create the lift. You look at the multiples comparing the cash flow to price ratios. The sector is about 25. You take out just 10 times that for easy math. We're forecasting to double our revenue from next year. So this is significant upside and some serious potential there for where Empress can go.
What macro factors do you think about when you're making decisions for the business? I mean, in macro factors beyond the mining sector in general.
Political stability of a country, really understanding geographically where we go. So we're in Peru, Mexico, Mozambique, South Africa. I've spent my whole career working internationally in Africa and South America, and as well as in Russia. So we look at the country environment. We look at how to structure, what is a legal framework, how to structure there, how to be able to get money in and out of the country, how to be able to take security over the assets. That's also something I should have mentioned earlier. With a streaming model, typically you're taking security and typically first ranking security over the assets. So that gives you that added protection built into it. Geographically, we're looking wide open, and that is leveraging off our expertise and past experience or endeavor to operate there. And then macro factors is gold and silver only. We've stayed true to that. And you look at the geopolitical uncertainty in the world and so many other factors happening now that I feel like we're in for a really good bull market.
And how big of a check can you write?
Right now, as our June financials came out, we've got $4.5 million US in gold, silver, and cash. We've been accumulating more gold and silver over the last while. So, we are gold and silver, and we're starting to hold that. We have a $20 million debt facility available from Nabari, US, that we can deploy into new investments. So we're looking at opportunities sort of that 5, 10, 15, $20 million range. As we grow and evolve, we will look at larger investment sizes, probably around the 25 million mark. The whole concept for Empress is we were seeing Wheaton do bigger investment sizes, $100 million plus, and no one was providing the streaming finance solution to the junior market. There's been a few competitors come in and looking at that. A lot of actually are no longer in the space, are kind of on hold now. So there's a lot of opportunity for these producers who have a bit of debt, a bit of equity, and then they need the streaming finance solution. We're trying to make that more readily available to the junior market.
If a new entrant is coming in and they're looking at a battery metal royalty company versus a gold and silver royalty company, and they're saying, well, if cash is cash, why is the gold company being valued higher? How would you explain that?
That's a great question. I think when you look at the torque of what gold and silver can go, I've been looking at some projections and listening to some amazing speakers over the last couple of days at the two Colorado shows, Precious Metal Summit and Denver Gold Forum. I think there is obviously a lot of demand for critical metals, but I think not only the demand for silver, which we're starting to see come through in the lack of supply, but I think the demand for gold as being a safe haven investment is very much prevalent. And that's why we've stayed pure to gold and silver. When we started modeling out our initial investments, we were using $17.50 gold and $17.50 silver. And you can see where the spot commodity prices are now. So we've seen a lot of upside. And I think we'll continue to see that being so leveraged to gold and silver.
How do you value exploration upside on a royalty that you buy?
We look at the mine plan that's provided by the company. So I am looking at what's in the ground, how are they getting it out, over what period of time. So we're not putting much leverage or much into the exploration side. That's pure upside. But I'm looking at the hard economics of what has been built out and what is planned. We did one in Mozambique, and that was a $3 million investment for us quite early on. It was a development stage asset. There was a 3.5-year mine life on that. It was about 4 years ago. And, they had a couple of satellite deposits that might or might not happen. It was a private company, so they hadn't done any exploration work. We've already received over $6 million from that initial investment. They have now done extra exploration work on those concessions. They're starting to work those concessions. They've picked up additional concessions. So this is going to have a lot longer life and run on it. That is definitely not even being valued in our share price or a reflection of what it is. But when we look at investments, again, taking that structured finance approach, it is what is the model they have, how can we apply economics to what is tangible and in front of us, and then the rest is just pure upside.
Alexandra, you mentioned early on in this conversation some of the recent transactions. The Tether one caught people off guard, the Tether investing in Elementis Altus. Could you explain the significance of that from your perspective?
I think it is amazing seeing new capital coming into our sector. I think Tether has a very clear strategy, and by investing in royalty and streaming companies, they will see that additional way of getting access to gold and silver. I think the merger with EMX is fantastic. Dave Cole, obviously, as you mentioned him earlier, has been in this business for a long time. He's got a lot of great projects in that portfolio as well. It's creating a real mid-tier company. And with Tether in there and able to write the checks, I think that's going to be a very interesting space for more acquisitions for them, portfolio acquisitions, and to develop some of the projects they have further along, especially with that prospect generation. I think it's great seeing new money coming in and new investors. We've been starting to see that as a sector over the last 6 months as more crypto money is coming into the space at the conference in Boca Raton. We're seeing it at some of the other ones. And there's more generalists coming in that I've seen at recent conferences. And I think that's just, again, as people looking for places to put money and maybe perhaps have more diversification in their own portfolio. You've seen it recently in Asia where people were typically holding 4% gold, and some of the high net worth individuals who've increased that to 12% in 2024. So we'll see what those numbers look like in 2025.
Alexandra, Rick Rule is an investor in your company, and you probably know a question that he will often ask executives is, what are the 3 things most likely to go wrong, and how will you deal with it if you're facing it?
It's junior mining, so nothing ever goes perfectly according to plan. Most likely to go wrong is one of the investments isn't strong enough to move it forward. It slows down. And that's why I am focused on diversification and bringing new assets into the portfolio. And, we started off with 1 producing asset. We now have 4. So it is expanding that out with the right ones. It is getting another one is bringing in the right next investment. It's been a while since we've done a deal or brought a new investment in. But our revenue has been doubling, and that will continue to increase with what our current portfolio is. So I'm actively looking for new investments to bring into the portfolio for further diversification. That's geographically, that's stage of project, that is management teams, that is, getting that 5th, 6th, 7th. But that's definitely the focus right now. So it's growing the company out. There's also the country risk. But again, that's how we structure the deals. For example, the one we did in Peru, we get gold credits every week from Metalor. So they produce the right bar. It gets shipped to Switzerland on a weekly basis. And then 10 days later, when it's processed at Metalor in Switzerland, we receive that silver credit. So there is country risk, but we structure around that risk.
What about being too leveraged yourself? If you're taking on debt to buy royalties, how does that pose as a risk?
I come from a debt background. I am very comfortable with debt and growing and building businesses out. That's been my whole business model, as is Endeavor's. So we are comfortable taking on manageable debt to do this. But again, the critical stage for us was getting enough cash flow coming in. So we're building up the treasuries now that will allow us to do it. We want to grow the company. We're all large shareholders, so we are avoiding any unnecessary dilution in the company. But I also need to grow this company. I need to get that critical mass going. We finally have a stable portfolio. We're cash flow positive. We have net income. Now is the time for us to really do something exciting and strategic to grow the business. So it's that critical time, and you can look towards the sector of other companies. A lot of the materials are no longer around that got to this point, or we were able to get to a certain point and then grow it, and then they've been taken along the way. So now is our real high growth period.
Royal Gold bought Sandstorm and Horizon Copper. Your commentary here, please.
Yeah, no, I think that, obviously for being an all share acquisition, I think that was a good acquisition for them. I think that's going to give Royal Gold a huge lift. And it's hard for the majors to do things that really move the needle. Same with the mid tiers. So I think some of these M&A transactions we've seen are giving them some movement and some positive reaction in the market. So yeah, I think it's good. I think it's good for the whole sector.
Final thoughts? Where should investors find value in the royalty sector outside of your company?
I think there's so much value in the royalty and streaming space. There's obviously many ways to invest in mining. I think people need to find out where their comfort levels is. I think everyone should have an aspect of royalty and streaming in their portfolio. I think they need to figure out and understand there's different types of ones and the risk profile associated with each ones. The big, large, stable ones, the mid tiers, and then there's some very attractive junior and macro ones to look at for that more speculative aspect to the portfolio that can really get that leverage and that real win.
Excellent. Well, thank you for coming on the show today and sharing your insights.
No, thank you. I love the space. I think it's a great way of investing in the industry. It's an exciting time on multiple levels in the sector. And I'm happy to talk about and answer any questions again in the future or with anyone that wants to reach out and have a call.
Thank you.
Thank you very much.